Good morning and welcome to the ADS Securities Markets Update. During the US session yesterday, the economic releases came in with mixed outcomes that are mostly negative, and this continues to weaken the chances for a rate hike by the Federal Reserve in September's meeting. The first disappointment came in from the S&P CS City, or the month-over-month for the house price index in 20 cities, which unexpectedly declined by 0.18% in May, despite the fact that estimates pointed to a rise by at least of 0.3%. And moreover, April's reading has been revised lower from a growth of 0.3% to a decline of 0.03%, and this is the second monthly decline in a row, one that we have not seen since the middle of last year. The year-over-year house price index also slowed down further toward 4.94, despite the fact that it had been anticipated to continue or to rise further toward or to recover more toward 5.6%. The second shock came in from the consumer confidence index, which unexpectedly declined or saw a sharp decline toward 90.9 in July, while it had been anticipated to decline slightly toward 100. Moreover, May's reading has been revised even lower toward 99.8 instead of 1.4, and this is the lowest reading since September of last year. And also, this is the biggest month-over-month, or the biggest monthly change or rate of change since October of 2013. The expectation index and the current situation also came in with weaker numbers. The good news came in from the services PMI, which increased toward 55. Services PMI also increased to 55.2, up from 54.8 during the month of July, and the Richmond Fed Manufacturing Index also advanced toward 13, up from 7. And during the same period, despite that, sales and the employment components came in with or weakened again. In Asia, there was one economic release from Japan, which had a notable impact on the Japanese yen and on the market. The retail sales declined less than expected, declining by 0.8% or 0.8% in June, after rising by 1.7 in May, while the estimates were to decline by at least of 0.9%. And basically, this is the first monthly decline in almost 2 months. However, the year-over-year sales also slowed down more than expected, toward 0.9%, down from 3%, while it had been anticipated to slow down only toward 1.1%. And this is the lowest reading since since March of this year. As for the European and the US session ahead, there are minor economic releases throughout the day from Germany, Switzerland, the UK, and also the US, including the consumer confidence in Germany, UBS consumption indicators in Switzerland, the net lending to individuals and mortgage approvals in the UK, and finally, the pending home sales in the US. Despite these figures, the impact is likely to be short-lived, as we all wait for the key event today, or the key event tonight, from the Federal Reserve, which is the FOMC decision. For the time being, we believe that the Federal Reserve will keep the rates on hold, but likely to include the latest developments in China, which might be the new excuse for the Federal Reserve to delay the first rate hike again. But for the time being, September's rate hike remains on the Federal Reserve table, with more than 50% chance to raise rates in September. And as for today, a dovish tone is more likely to keep the US dollar under pressure. Going forward, or to some technicals today, and starting with the US dollar index, starting with the dollar index, which basically resumed its declines again after testing 97, or the point of 97 resistance area, and retreating back toward 96.60 so far. In the meantime, or the daily close basically remains bearish as far, because the index failed to regain above its broken trend line resistance, which basically also the technical indicators are still moving lower on most of the time frames. In addition to that, also the momentum index remains below the zero barrier, and basically this indicates that another sell-off could be seen ahead of the FOMC decision. However, this we might see some tight range ahead of the FOMC decision. The GBP, or the British pounds, also followed our estimates again. Followed our estimates again, and we gained above 56 during the US session, reaching as high as 56.28 so far. And the pair also closed the day well above its 50-day moving average. In addition to that, the pair remains also supported by a short-term trend line, which basically clears the way toward, or for further upside toward, 56.40 and maybe 56.70s. In addition to that, going forward to the euro, the pair also yesterday, or the euro, managed to stay well above 1030 support area throughout the day, while the US figures also led to another slight rebound toward or above 1060. And on the daily the daily close seems to be positive, as the pair also remains well above its 100 moving average on the 4-hour, and also above its trend line on the short term. But technical indicators also remains bullish on the upside on most of the time frames, and also the momentum index is above the zero barrier. The obstacle resistance right now remains at 111, which basically represents its 50-day moving average, and this basically should be watched very carefully today. After breaking or going forward to the Kiwi, and after breaking its downtrend channel, and as continued, or as we previously noted in our previous report, after breaking the downtrend channel on the medium term, which basically lasted since April of this year, the pair continued to rise. The pair continued to ride again above the trend line, and continue to rise toward, or reaching as high as 67.09 during the Asian session. But for the time being, the outlook remains bullish toward also 67.46, and maybe we might see also another increase above that level, which basically represents its 200 moving average on the 4-hour chart. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching. I'll see you once again tomorrow.